Hi, my name is Jason Grider, and I'm with the Grider Peterson team, and I'm here just to give you a little market overview of what's happening in Eastern Idaho. In real estate right now, it's a little bit slower than we've anticipated this year, and this first slide actually shows us annual sales comparison that we are about 29% below the high in 2020. We're a little below last year, and so we've continued to trend down even though interest rates are continuing to improve. But right now we're seeing that slow. Even though we're getting a bigger population, there's more people in the area, we're still selling a little bit less than we did in previous years. The average monthly sales month over month. So this kind of shows seasonality. A lot of people in Eastern Idaho feel that the winters make it so that no one wants to buy or sell in the winter, but that's actually not true. We do see quite a bit of a drop in January and a little bit in February, but other than that, most of the year is pretty close. We're seeing about 6% or so forth in the slower months and a little bit 8% in the higher months, which really isn't that big of a difference when you take out the peak months. Inventory levels drop at that point as well, and so pricing and days on market really don't increase. The next one talks about the year-over-year comparison. What we do here is we look at trends. So we're looking at a 3-month scope, or basically a rolling quarter that we can look at year over year to see where we're at. And this actually shows us that our peak, we're actually higher in pricing right now. So the average sales price right now in Eastern Idaho is about $450,000. A lot of that is because people are buying more expensive homes. So pricing hasn't increased that much this last couple of years, but the average price has because people are buying more expensive homes. That higher end market isn't as affected by the interest rates as the lower end market is. So people buying $1.5 million homes typically aren't as affected by 6-7% interest rates, whereas $300,000 or $400,000 homes are a little bit more affected by that. That's where we're seeing that increase go up. Also, in that we're seeing days on market. Days on market is a little bit longer in that as well. And then of course, the interesting thing is, of course, when looking at it over just a quarter versus year to date, we're still a little bit lower in that last quarter as far as total number of sales. So also we want to look at the historical inventory. Inventory levels, it really shows us, that's probably the biggest indicator of whether home prices are going up or whether they're coming down. And right now we're hovering right around the 4s. So 4 months of inventory. What that is a snapshot of how many homes we have on the market, and at our current rate of sale, how long it would take us to deplete the market. So right now we're hovering around 4% for our whole market, and that is just an indication that we're staying pretty true. So home prices, even though home sales, total number of sales are going down, our prices are staying pretty firm, and they're not going down because less people are listing. You have those people in homes where they may want to move because they want to upgrade or they want to downgrade or get a little more land, but they're not doing it because they're in a really great interest rate right now, and they don't want to upgrade into a 6 or 7% interest rate when they're at a 3 or 2.5. So we have less people listing, and that's keeping the home prices firm. Otherwise, our home pricing probably would go down substantially at this point. But that's keeping us pretty firm right now, which is a good indicator for people and the home values they have and the equity they have in their homes.